So you need to take steps. If you know this is happening, don't call somebody, 1 month, 2 months in advance. If you own a lot of assets that are subject to this departure, we need to plan for it. If you're moving to the United States, okay, it's one thing. But for your audience, if you're moving to Mexico, when you leave Canada and you're deemed to sell an asset for the fair value, you don't necessarily get that same cost base going forward in your new country. So you could have double taxation.
Yeah, but
And
they have treaty. Yeah.
well, yes, there are treaties, but not all the treaties have this. The United States has something that can deal with this, but Portugal, for my example, my memory, I don't know all the treaties off the top of my head, but from memory, a lot of the treaties do not have this. But Canada has a mechanism. I'm trying to remember for sure it is for real estate, but I'm trying to see if it is for something else. For other stuff, for example, like for Bell Canada securities and marketable securities and things like that. If you leave Canada and you don't have compensation for that deemed cost in the new country where you sell the property in the foreign country, if you are subject to the same tax on the same portion of the gain, Canada will let you go back and recoup that tax. So there is a mechanism in the Income Tax Act that if I pay tax in two countries, Canada and let's say Mexico, on the same value, Canada will let me go back and take away the Canadian tax. So I'm only paying tax in Mexico. So these are the things we need to look at when we're leaving. What's going to happen now? And what's going to happen when you start selling stuff in the foreign jurisdiction?
To your clients to prepare the tax strategy before they leaving, and after then, with time plans are changing to come back to you again to review based on the new situation, changes in the taxation law. What
Well,
is your advice?
Well, I say before you're leaving, you give me a list of assets and what you paid for it and how much they are worth, number one. Number two, what is your plan? Like, are you leaving for 1 year? In which case, maybe we just keep you resident of Canada. Are you leaving for 2 years? Okay. If you are leaving for 12 years, you're applying for a green card, you have your wife and kids down there. I mean, that is, you are now leaving Canada's tax net. So I need to know a list of assets. I need to know your plans. 1 year, 2 year, 12 years. I need to know if you're going to come back or not. If I don't know, then you
Yeah,
try to
and
then you try to pick a flexible approach. One flexible approach is posting the security because if you're going to come back, like I said, you can get the security back. But if you just pay the tax and it's not security, it's just tax, well then you can't get it back. So one method
I
in
see.
flexibility is to put it as not a payment but as security. The government will hold it. If I come back, great, I get it back. If I don't come back, then when I die or sell the property, tax will be paid then.
But what if people are selling their property and securities before they kind of officially leaving? They renting, I don't know, they in Canada, and year after the sale of property, they're leaving. No exit tax?
Yeah, if they don't owe anything, if they sell before they leave, then there's no obligation because they are going to pay
Okay.
the tax when they sell here in Canada. They will sell before they leave. So Canada will get their piece of the pie.